I want to break apart two concepts. One being the U.S. economy, and you might think of this as growth in stocks, the performance of businesses, large-scale economic metrics for the U.S. economy. But separate from that, we'll talk about the impact and how the economy is felt by basically laborers, working class, middle class, and I put that kind of as a separate concept. You can have a phenomenally strong economy and have a poor experience for the workers within your economy. And I would say that if we looked back over the relatively short-term history, going back to just after World War II to about 1970s, 1980 at the latest, we had a really strong economy. But at the same time, there was very good growth for the workers that were supporting that economy. And so productivity gains, other income gains for the nation was reflected in the working class and middle class groups especially as well as it was with capital holders. If we fast forward to 1980 to about now, in this last 45-year period, economic growth has been moderate throughout that period. We still had good growth, not as good as right before, but we still had pretty solid growth. But that didn't translate into proportional growth for earnings for the working and middle class. These have lagged behind. They've even lagged behind inflation. And inflation should not be the metric that our earnings are keeping pace with, or we're losing out overall. Growth is happening at a rate that's faster than inflation. So if you're only meeting inflation with your earnings, you are losing pace to overall economic growth and earnings growth across the board, which is what leads to a lot of other problems that we'll talk about in other videos on the channel. But overall, we can say that there was a period from, again, sometime in the 40s up through about 1980 as kind of the tail end of it, when there was very strong growth for the working class and middle class that kept pace with overall growth. And since that time, even though the economy has continued to grow, wages have remained relatively stagnant when adjusted for inflation and have even lost ground when adjusted for inflation.